Good afternoon, ladies and gentlemen. Today is Friday, 23rd of April, 2021. This is episode 2 of Hindsight, where we look at what moved in the markets. Now, there are two stocks that moved. We've got BCK and Kogan, so KGN for that stock ticker. Let's look at BCK real briefly. This was really fascinating in every fucking way. This is such a strange stock. We've got a move from 2.6 to 2.8, so barely showed up on any scanners. It rallied all the way to 12 cents for some reason, and the news announcement was a offtake agreement with China. And I didn't really look beyond that headline or those dot points, so I don't know if the announcement was actually any good. I ended up catching the bounce at the 8 cent level, caught it at 8.1, 8.2, and 8.0. And then as it was setting up, it looked like a pump consolidate, but it just didn't end up pumping. So what we have here is a nice setup. High volume hold it every time it hit 8 cents. However, on the way down, high volume every time it reached a peak. It was more like a descending triangle, but whatever. It was still a consolidation at the highs. You know, this is still up like 400% and holding its highs. Usually a good sign, but this isn't a pump, consolidate, and hold and pray for next week. Right? That's not what this setup is. So we got here a sell-off right into close. I had no choice but to sell as this was coming back down. I only made a couple of ticks out of it, really nothing of worth. But ultimately, it was a perfect setup. Didn't go our way. Extremely rare to see a pump consolidate actually fail. But this was a case where it just couldn't hold its value right towards the end of the day. Normally, pump consolidate leads to a pump by about 2:30, 2:45, sometimes 3 o'clock. So into 3:30 right before close, it's like, well, see you later. There's no point holding this anymore, right? Now, the other stock today was Kogan. Now, this was not quite an A+ setup fundamentally, but it was at least an A grade setup. So what we have here, to give you some context as to why the financials were bad. To give you some context, and this is important, is that this stock at the lows were $3.50 and at pre-COVID levels was about $7.50. Rallied to $25, has come back down, but it's still well above pre-COVID levels, so their numbers must be good. Now, of course, there were some financial announcements on the way up and some on the way down. Now, we have a Q3 update that came out today, and clearly it was no good. But there was a few things to note about the whole setup for the day. First things first is that the news announcement came out at 9:30, so it was a little bit late for the day. The second thing that was good about it was people had no idea whether this was good news or not. People are saying that it's good. You can read the comment section on something like Hot Copper, on Twitter, on Facebook. Read the comments of just your average Joe. They haven't the slightest clue. I mean, the first comment here is, let's see if some level of shorts will cover today. It's like, not a chance, buddy. This was going to be a monster sell-off. So 10 minutes after this news announcement, I put up a tweet that this was going to be a monster short. There was no doubt in my head that this was an A-grade setup short. Now, the third thing that was really good. So second thing was your average retailer not having a slightest clue whether this was good or bad. They probably thought it was good. The third thing that was really good about this setup was that it was positive. The indicative price was positive, right? It was gapping up into the open. So it was like 10:01 a.m. when it started ticking down. And by 10:04:15, which is when the earliest price they could open, it dropped down to like $11.75 or whatever it was for the open. So it was a clear as day short, and it was held up mostly probably by retailers up to that point. And it was beautiful, right? It enabled the shorts to be amplified on the way down, which is good because obviously you don't want too big of a gap down. You know, the less of a gap down, the bigger the short potential on news like this. So let's have a look at the actual announcement itself. Real briefly, let's go through the dot points. Gross sales up 47%, revenue 65%, gross profit 54%. Does that sound good? Mwah, sounds beautiful. Now you can see why your average retail pleb thinks that this is good news. But keep in mind the context of, well, Kogan's still up 100% over pre-COVID levels. And then you get this point here, which is adjusted EBITDA declined by more than 24%. So that kind of rang alarm bells straight away. How the fuck are you a negative 24% when your revenue's up 65%? EBITDA, for those of you who don't know, is earnings before income tax, depreciation and amortization. I always get that wrong. So that's a very bizarre thing. And I've got a video for you guys. I'll put it in the comment section below, how to read these financial documents. These are really, really basic documents. They're not hard. Spend 5 minutes and educate yourself and, spot the gap down coming. We've got, if we scroll down, we can see Kogan.com, the actual website, which is what I know Kogan for. I didn't even know Mighty Ape existed. I don't even know what it is, and I don't care. I think most people know what Kogan.com is and associate KGN, the stock ticker, with the website. So we've got adjusted EBITDA on this one at negative 42%. So an even bigger decline when you look into the details. The gross sales, the revenues, they all sound good, but the adjusted EBITDA is in massive decline. That should never happen. You should never have an EBITDA in decline. Doesn't matter if the sales are up, the revenue's up, gross profit, whatever, don't care. EBITDA is down, the stock's going to get smashed. So, all that in mind, this was still tricky to trade, right? Still tricky to trade. And I'll go through the trade. But there was clearly a match short. That was always the plan. If it was gapping up, I would wait for it to become a short before shorting, because I don't like shorting or fading stocks like this. I'm not very comfortable in fading. So, once it gaps down, match the short. I even made a video of it because I was expecting this to absolutely get slaughtered down to like $10.50, $10.20 in the opening 15 minutes, but it didn't actually sell off that fast and hard. It was actually kind of a grind today, which I found quite surprising. So I did record the Kogan, the book. I did record the setup, and I was doing some commentary on it, but it really was actually extremely dull to trade. I kind of just watched it a little bit, and there wasn't much to say. It was just clearly a short. Now, the fascinating thing that did happen was this rally here. Now, I expected this at some point today. And the earlier the better. It was a rally into VWAP. So the white dots here are VWAP. Added to my short there, that was the add-on. Worst case scenario, it comes back up to retest 1180, which is the opening price here. That would have just been a second add-on short position. Scale in. And then have a stop loss maybe like somewhere around here, like just a few ticks above the opening action. That should never, ever, ever have gone above the opening price once it sold off like this. So the plan was perfect. Everything was going swimmingly. There was a big wall at $11. So we got around here, $11. It broke. It dipped below on high volumes. Of course, there was a big wall there. Mostly retail orders, I noticed. So all the orders were very small. There was about, 200 and something thousand, 240,000 shares at the $11 mark. Most of the orders were very small, 5,000, 4,000, whatever, a few hundred shares. So it wiped that. And then funnily enough, it came back down. And it's not surprising that it wipes, a big level and big volume, and it kind of just lingers and then eventually comes back down. That was the kind of expectation, that it doesn't hold the lows. But what we ended up having was a bit of a rally, and that kind of caught me out by surprise, because I had a strong short bias. That I could not get rid of that bias. That was there permanently. I was convinced that this was going to $10.20. That was kind of my target, the low 10s. So ended up closing the position as it got through here. Now, there was a nice little setup here where it could have got rejected, but it actually held up, started coming up, and I had no choice but to close out on the high volumes here, right above VWAP. I was pretty gutted because I was so convinced that this was a short, so convinced that this was going to die, that it was frustrating, because the technicals were telling me it's long, right? Every day of the week is a breakthrough VWAP to the upside on good volumes along. Technically, that is the correct thing to do 100% of the time. There's no debating that. But what ended up happening was a rejection perfectly off the first standard deviation. You couldn't ask for a better rejection. I didn't pay attention to that. I did, however, see this candle, this red candle, and that sort of took my eye as, hold on, this could just be a fake bull trap. But really, a high volume break above VWAP into a pump back up, that was, a bull trap usually doesn't last this long. Sorry, it can last that long and then come back down. That was the expectation if it was a bull trap. I just re-enter the short. But it ended up actually rallying again, and I thought, well, I don't want to take a long position. I couldn't actually bring myself to take a long position. It was probably the correct thing to do. But seeing this candle here was like, okay, maybe the stock is just fucking with me. right? ZipPay does it a lot. ZipPay is notorious for fucking around VWAP and just messing a bit. It's not a clean trader for me. But this was perfect. Coming off VWAP, failing to make new highs, coming back down. That's where I started scaling into short at 11.34 and then piled the fuck on when it came back under VWAP and was hesitating to go back above it. For me, this was clear as day, piled back in full size 11.20 by 11.24, full size back in the short. At this point in time, I was comfortable. I was happy because this was going exactly where I wanted it to. Now, at this point in time, at no point should it dip and then head back above VWAP. That should never, ever, ever happen technically. From a technical perspective, this was the opportunity. That was the opportunity that if this was somehow a positive news announcement, this was going to hold. Technically, that is correct, 99% of the time. But failing to hold above VWAP, this was going to do exactly what I wanted it to, and that is to smash that $11 level, clear it, and grind, of course, grinding along the lows. It just took time. And look, by this time, by 12:30, I was, by around this time, I was heading off for lunch. I didn't care. My stop loss was somewhere around here at 11:30, 11:32, because if this, for some miracle, ended up swinging back up, there could be a VWAP rejection. That's where to add on short. But if it ever got to like 11.30, then there's no way in my mind this could ever go to 11.30 and not end up being bullish. So that was my stop loss. I kept it a little bit wide. I didn't want to get faked out while I was out at lunch to, like 11.20 or keep it too tight. I certainly did not expect this to happen again. If it did, I'd neck myself just in frustration. But really, I think that was the right thing to do. And I have a bad habit, right? And that bad habit is I'm usually unable to hold stocks into close. I'm terrible at that. I usually get freaked out by little moves like this. But I knew that if I just went for lunch and I was A+ on my short, I was full size, couldn't be happier. I knew that if I just held until the end of the day, I'd be cheering. And of course, the plan always was the low 10.20s. I did end up closing in auction 3/4 of my position. So look, I'm still happy in this range. Still happy to get this whole move. Really fucking happy to get that move. Holding some of the position because I'm expecting a follow-on tomorrow. Maybe a bit of a move, maybe a little bit of a gap down, an attempt to break this horizontal here at 10.64. I don't expect it to rally, and I'm not big on holding overnight shorts unless it's a spec stock of some sort. So if you found this insight helpful at all, please do hit that like button. I'd appreciate that. And if you're not subbing, then please hit that button for me. I'd appreciate that very much. Otherwise, that's it for the analysis. So keep in mind for Monday, Kogan is definitely going to be on the radar. Whether it gaps down, whether it gaps up, it doesn't matter. It's going to be a trader, I think, irrespective. I think news will flow over the weekend and people will see the numbers and maybe people decide to short it or close out their long positions, people that are still holding. It'll be interesting to see. And, I'm not recommending to buy, sell, or do anything with the stock. Hell, I don't know what it's going to do on Monday. I haven't the slightest fucking clue. I'm still holding 1/4 of the position, hoping that it does end up gapping down and continuing. And of course, these are the key levels. And that's pretty much it. Have a good weekend, guys. Peace.